The first thing to know about Small Business Administration loans is they don't actually come from the Small Business Administration. The Small Business Administration, or SBA, guarantees these loans in case of defaults, but the loans themselves are actually issued by big conventional traditional lenders. Sources like Bank of America, Wells Fargo, Chase, Regions. They're the ones that will actually help you secure your SBA loan, but if you ever default, SBA guarantees the loan to offset the lender's risk. Look, we've all heard before that the majority of small businesses fail. And the problem with that is it makes it inherently very risky for banks to lend money to small business owners. Look, the big banks like Bank of America, Wells Fargo, and Chase are government insured. They're required to be very conservative with their risk. This is where SBA comes in. SBA goes to those big banks and guarantees the loans they issue in case of default. They'll actually guarantee as much as 85% of the loan. So let's say Bank of America gives you a loan for $100,000, and let's say you never make a payment and default on the whole $100,000. Well, if SBA guaranteed 85% of that, then SBA would eat 85% of that loss, and Bank of America would only eat $15,000 of that loss. Because that SBA guarantees offsets Bank of America's risk, that's how Bank of America is able to lend money to you to begin with. This is why you can get some of the best financing from the big banks, because they're getting guaranteed financing from SBA and they can give you low interest rates and great terms. So what kind of funding can you actually get from SBA? Well, the Small Business Administration actually guarantees 3 different kinds of funding, all of which we're going to talk about during this training. But let's start with 7A loans, because 7A loans and credit lines are the most commonly used kind of SBA product because they're for working capital. They're used for multiple different purposes, whether you're getting marketing, whether you're expanding your business, whether you're actually buying a new business. 7A loans are what's most commonly used when it comes to SBA funding. The Small Business Administration actually has 9 different kinds of 7A financing, the first of which is called a standard 7A loan, and this is a loan that's available up to $5 million. Now, you can also get a small 7A loan, which has a ceiling of $350,000 and which is way easier to get approved for than an actual standard loan. SBA Express, you can actually get your approval in as little as 72 hours. They have a great funding option for veterans, another great funding option that's available through their preferred lenders. Preferred lenders is like a small group of select lenders that have more underwriting authority from SBA, and therefore it makes it easier and faster for you to get your money through them. Now, there's one kind of financing if you're dealing with specifically international business, 2 types of financing if you're dealing with import and exporting businesses, and there's 4 different kinds of credit lines that are available under SBA's cap line program, which is just basically their name for their umbrella program that actually encompasses their credit lines under the 7A program. There's 4 different kind of credit lines available under SBA's umbrella program known as cap lines. The first of which is for seasonal businesses, businesses like ski resorts that are only busy certain times of the year. There's another type of credit line that's available under the 7A program that's actually specifically for builders, another one that's for people with assignable contracts, and yet one other that's called a working capital line. And this is what most business owners are going to go after because you can use it for most general purposes. That's all of the 7A type of financing options that are available. What you want depends on how much money you're looking for, how fast you want to get your money, and specifically what you're looking to get your money for. The second type of financing SBA offers is known as 504 loans. Now, 504 loans are designed for a specific purpose, and the purpose is to buy fixed assets or refinance fixed assets. So if you're looking to buy or refinance equipment, if you're looking to buy or refinance actual real estate, or maybe a parking lot, pavement, actual utilities, fixed asset financing, this is exactly what 504 financing is for. So if we think about it, 7A financing is for like most working capital needs, marketing, expansion, buying a new business, whereas 504 financing is specifically for the purpose of buying or refinancing fixed assets. And the last type of financing SBA offers is one that most entrepreneurs know nothing about, and it's called microloans. Now, microloans are just what they sound like. They're very small loans with actually a ceiling of $50,000. But here's what's nice. Microloans work for even new businesses. Even if you're just getting your business off the ground, you can qualify for these SBA microloans, but they're not available from the big banks. Look, big banks with low interest and very short terms and small amounts of money don't make a lot of money. So they don't want to lend small amounts of money through SBA. This is where SBA intermediaries come in. Their intermediaries are ones that offer these micro loans, and these are basically nonprofit organizations that SBA uses to offer these small loans to newer businesses. So if you're only looking for a small amount of money, you really want to consider a micro loan because you can get approved for up to $50,000, and it's way easier to get micro loans than the other kind of financing SBA provides. So what does it take to actually get approved for an SBA loan? Well, that's one of the important things to know about SBA financing. SBA is guaranteeing the loan, so you've got to meet SBA specific underwriting requirements. Plus, you also need to meet the bank's requirements because they're the one actually issuing the loan. So therefore, it's way harder to get SBA loans than most other kind of financing it's available. As a matter of fact, I'm going to show you how to access a lot of other ways to get financing at the end of this training that's way easier to qualify for than SBA loans. But when it comes to getting SBA financing, here's what SBA wants to see. First of all, you have to have good personal credit. Now, they specifically say on their website to remove any blemishes from your credit report before you even apply. We've seen borrowers with 780 FICO scores denied because of one late payment on a major bank account. I think that late payment was with Bank of America. So you need to have really good personal credit. Plus, you need to have good established business credit as well. Look, SBA uses a score called FICO SBSS. This is FICO's small business score. It's different for every bank because the bank determines what's calculated by weight into the overall score. But here's what you need to know. In order to be able to get an SBA loan, you have to have a minimum score of 140, and it's mathematically impossible to have a 140 score if you don't have established business credit. So you need to have established business credit, good personal credit, good business credit with any blemishes that could potentially be on your reports removed in order to get approved. SBA is also going to require documentation to verify your cash flow. They're going to want to see an up-to-date P&L statement and prior P&L statements as well. They're going to want an up-to-date balance sheet, and they're going to ask you for 3 years worth of tax returns. On top of that, they're probably going to want merchant account statements and bank account statements as well. Now, preferably, they want to see that your income is consistent or even increasing year after year. It's tougher to get an SBA loan if your income's actually declining. The last thing SBA is going to want to see to get you approved is collateral to offset the actual debt. So they're going to want to see collateral equivalent to the amount of money you're borrowing. So if you're borrowing $100,000 from SBA, well, they're going to want assets that you're serving up and pledging as collateral that's equivalent to $100,000. Now, a lot of things can work as collateral with SBA. From the business standpoint, they're going to look at inventory or equipment. They're going to look at real estate, vehicles you may own. They may even look at account receivables. As a matter of fact, account receivables are the most popular asset used for SBA financing. On the personal side, they may want to see stocks, bonds, 401ks, IRAs. They may even want you to actually serve up your home as collateral to offset their debt. Remember, the key with collateral is you need to have the same value of asset that you're serving up as collateral equivalent to the amount you're borrowing. If you have that much in business assets, they're typically not going to ask you to pledge personal assets as collateral. You just need to make sure you have enough assets in total that are equivalent to the amount that you're borrowing through SBA. One of the best benefits of getting a small business administration loan is the terms they provide. Yes, the qualifications might not be easy, but the terms are brilliant and makes it really affordable for you to borrow a lot of money from the SBA system. As a matter of fact, you can get loan terms as long as 30 years with SBA loans and interest rates as low as 5 and 6%. And when you combine those two things, low interest rate and long terms, that's what gets you really, really affordable payments. Let me give you an example. We borrowed $325,000 from SBA with a payment of less than $5,000 a month. But when we borrowed $75,000 as a merchant cash advance, our payment was nearly $10,000 a month. That's right. Our payment was twice as much for a $75,000 loan as a $325,000 loan was with SBA. That's the benefit of getting SBA financing. So there you have it. Now you know everything you need to know about small business administration loans. You know how SBA works, you know where to get the money, how to get the money, the kind of terms, the qualifications. If you're interested in getting an SBA loan, then go to creditsuite.com/get funding. That's creditsuite.com/get funding, and we'll connect you with a brilliant SBA source that can help you secure your financing. Want an easier way to get money? Then make sure you grab our free guide on 27 killer ways to get money from your business at creditsuite.com/27 ways. That's creditsuite.com/27 ways. And if you got value from this, make sure you like and subscribe, and don't forget to grab your free business credit and funding consultation. On a consultation call with us, we'll get your business credit reports for free. They cost you $249 from the business credit reporting agencies. We get them for you at no cost. We give you tips and tactics to improve and build your business credit. We do a fundability assessment to fix any of the things that are wrong that make you more lendable. And we do a funding qualification to talk to you about all the money you can get now, much of which is way easier to qualify for than SBA financing. Don't forget to like and subscribe and follow us on our next training where we talk about more cool ways to get money to grow your business.